Hey, it's Andrea from New Avenue Realty at Dallas Preston Road, Keller Williams, and today we're going to talk about rebuilding your credit and how to rebuild your credit in order to qualify for a home. So if you are looking to make a purchase on a home within the next 12 months, this is the perfect information to help you figure out what you need to do in order to purchase your first home in 12 months and also rebuild your credit, especially if that's something that you have an issue with and that's what's really stopping you. Because I will say this, you're not going to be the only person who has credit issues. A lot of people do, so you're not the first and you definitely won't be the last. So basically this is what this whole topic is, and I decided to go live for people to be able to understand what you need to do in order to have really great credit and be able to purchase your first home. So the first thing, a lot of questions that I get is what does my credit score need to be in order for me to purchase a home? And what I would tell people all the time, especially if you're just needing to know what you need to do to be able to purchase your first home, I'm going to give you guys some of my tips. And these are tips that I use like early on in life, be able to rebuild my credit. Like I did homeownership counseling in South Dallas, and basically these were the tips that I gave people to be able to purchase their first home. And a lot of the people were people who were first time homeowners, like first generation homeowners. So that's basically what it was. Hey Felicia, how are you? And so those are the tips that we have, and I'm just giving you guys knowledge that I know, and hopefully it'll be helpful for everyone out here. So when I talk about credit score and just credit period, the first place that I tell people to go to, annualcreditreport.com. Can you guys see this? Annualcreditreport.com. Now, if you are one of those people who just got hit by the recent Equifax thing that happened where everyone's credit information was put out there, you need to be checking your credit report at least once a year. And here you can get it free here. Annualcreditreport.com. Free $99. That's my favorite price, y'all. So you can definitely get it there. The next thing is we're going to talk about, I get this question a lot, like, what does my credit score need to be in order for me to buy a home? What does my credit score need to be in order to get there? 580. A lot of lenders will qualify you with a 580 credit score. You do not need an 850. Like, that's the highest a FICO score can be. And you do not need a 850 credit score. And a lot of people tend to think that's what you need, but that is not the truth. A 580 can get you through the door in buying a home. Now, you do have a little bit more opportunities the higher the score is, but a 580 can get you through the door for an FHA loan. And like I said last week, FHA loan is called a Federal Housing Administration loan. It's backed by the government, so it's insured by the government. That's that type of loan. But the higher the score, the better opportunities you have, the more opportunities you're able to use. So if you have a 620 credit score, it gets you a little bit more wiggle room when it comes to rebuilding your credit. Or not even rebuilding your credit, just getting into a home loan period. Because with home ownership and with a 620 credit score, we're more able to do a lot of down payment assistance programs. Like, I remember talking to someone today and they was just like, I don't have enough money saved. And I'm like, they have programs for that. You don't have enough money saved, but you have a little bit of money. You can do a little bit of things into it. You can get into a home with a great credit score and using other money. Now, remember what I said last week? There's no such thing as free money. So don't come around talking about, oh, I got all this money for free. You're paying for it somehow, and most likely it's in your interest rate. Just know that's a way for you to get in the door and not use a lot of your own money. So what we're going to do, we're going to talk a little bit more about annualcreditreport.com and other websites you can use in order to rebuild your credit and help monitor it. So I already mentioned annualcreditreport.com is one of the first places you can go in order to know what's on your credit report. And I tell people, when you're looking to rebuild your score, the score, not even building your score, rebuilding your credit, the score really doesn't matter as much. Okay, the score isn't the thing that you should worry about the most when you're looking to rebuild the credit. What you need to know is what's reporting on the credit report. You need to go in and figure out, has someone stole your identity and charged up things you have no idea about? And I know with a lot of people sometimes, now I'm not saying this to say it in a mean way, but a lot of us had accounts in our name when we were 10, and that's not really even our account. Now, you can kind of get that removed, but there may be some other consequences in that. So do know that that does happen. But what I will say is it's important to know what's on your credit report, and a lot of people do not know. That's why it's really important to go to annualcreditreport.com once a year to know what's been hitting your credit report. At least go through it and write yourself out. Now, besides annual credit report, I tell people you can monitor your credit using tools like Credit Karma. It's a really popular app. It is free $99. Y'all know that's my favorite price. Free $99. You go to Credit Karma, download the app, put your information in, and you're able to monitor your credit report. So with Credit Karma, they do have 2 credit bureaus on there that you can definitely monitor your credit with. It's Equifax and TransUnion are the 2 credit bureaus that you can use the information on to be able to know exactly what's hitting your credit report. Now, when I say that, I tell people Credit Karma is really great to monitor your score. Monitor your credit report. Do not take the score that they give you as word. It's a great starting point. It may be totally different because different lenders look for different things. So if you're looking to purchase a house, they're looking at your FICO score. If you're looking for a car, that number may really work from Credit Karma. If you're looking for credit cards, that number may really work using Credit Karma. But with home ownership purchasing, that's totally different in the scheme of things. But using Credit Karma is a great monitoring tool, and it's an app you definitely should have. Now, when we talk about home ownership, I'm going to skip a little bit and just talk about what credit scores are lenders looking for. I get that all the time. Remember I told you 580 gets you a start in the door. And when I say credit score, let's talk about what lenders are really looking for. They're looking for your 3 scores. So they look for all 3. And when I say all 3, I mean all 3 from the credit bureaus. And there's 3 credit bureaus. You have TransUnion, you have Equifax, and you have Experian. Those are the top 3 credit bureaus you have. Hey Kiara. Those are the top 3 credit bureaus that you have, and those are what they're looking for. So when it comes to a lender trying to tell you what your score is going to be, they're going to throw out that highest score, they're going to throw out that lower score, and that middle score that you have is what your credit score is going to be. So take it like this. Let's say, and I'm going to add an extra number here. So let's say you have 3 different scores, and this is what your credit score looks like. Let's say you have a 645, you have a 580, and you have a 620. So basically you see the 645 is the highest score you may have. And that could be with any bureau. It doesn't really matter. They're just looking for the actual score. So that 645 thrown out. So now you have the 620 and the 580 credit score. 580 is your lowest, it's thrown out. So now you have a 620. This is the score that the not the credit bureaus, that the lenders are going to look for mortgage purchases. They're going to be looking for your middle score number, and that's going to determine your rates for a home. It's going to determine if you can qualify for a down payment assistance program. It's going to qualify you for a lot of different things, but it's that middle number that they're going to look at for the most. Also, I'm going to talk about, when we talk about rebuilding credit, you got to really know what the credit report is about. What is it stating? What is it saying? So I tell people, when you're looking through your credit report, and this is why it's important to go to annualcreditreport.com, when you're looking at your credit report, the first thing you should definitely look at is make sure the information is correct. Do you guys know there's tons of incorrect information on your credit report? People never say anything about it. Like, that could be detrimental to your credit report. Go through, make sure that you are the person that's on there. If they have your social on there, make sure it's correct. And usually the last four numbers, because they want to put all your social information on there. Make sure the addresses are correct. Make sure that the debts on the report is correct. They're your debts. You know that you had them. Make sure the balance is correct. It's little things like that that mess people up from having a really high credit score to a low one, because people simply do not pay attention to those things. Any incorrect information in your credit report has to go. I'll repeat that one more time. Any incorrect information on your credit report has to go. Either it has to go or it has to be corrected. You do not want incorrect information on your credit report, okay? So, I'm going to go back to different things that are influencing your credit report. Once you have all the correct information on your credit report and you know it's correct, you've disputed about it being correct, and you wanted to update it for what it needs to be, make sure that you know these things. There's 5 factors that influence your credit. And if you guys have a question, feel free to chime in and I'll make sure I answer them as time goes. Hey, Shauna, make sure you ask them and I will definitely answer them, okay? So, Your credit report and your credit score. This is why I say it's always important to know what's being reported and not necessarily what your score is, because what's reported determines that score. So 35% of your credit score is based on your payment history. Now, payment history meaning, have you paid those items on time? Are there any late charges? All those things factor into what your credit score is. One late payment, you guys, will kill your score by like 50 to 100 points. Like, it goes that fast. And when I say late payment, a lot of people tend to think, oh, it's basically because, you know, I forgot to pay this bill and I was 1 month late, or I was 2 weeks late, so it's going to hit my credit report. Here's interest little tip. It takes 30 days of a late payment before it hits your score. Get it in the 30 days for the payment and you'll be okay. Second, amounts owed accounts for 30% of your credit score. So if you have a credit card and you've ran it up to the max, you're dropping your score because you have it maxed out. I always tell people a trick of the trade is to not spend no more than 30% of your credit card limit. So if your credit card limit is $1,000, try to keep the balance below $300, because what 30% of that is counting for your credit score. Next, the length of credit history. So if you just started building your credit, of course it's going to take some time before you can even like really build it up and have it really high, because the longer the credit you have, the higher your score is. So if you have some credit on your credit report and it's been there for 10 years, take care of that. Like, really take care of that, because that's helping you boost your score up and keeping it up high. Next one is new credit or inquiries. That counts for 10%. I'm going to give you guys my story. And I know I'm kind of like off topic on how I'm driving this today, but I'm going to still give you some of my tips. How many of you guys go into the mall, and I'm not going to name the store because there's a lot of them that do it. I'm just going to use the mall as an example. And they say, you know, for 15% off, you can get this credit card, and, you know, that'll take 15% off your bill. And you're like, oh, for real? I get to save 15% more? That's a credit inquiry that just hit your credit report that didn't need to. And I tell people with store credit cards, they do not boost your credit score at all. So it's like really not a big major point to have one of those. And I know a lot of people are like, oh, but I get the discounts and stuff like that. If you're looking for discounts, or you're just looking to have a credit card, get a credit card that you can use in more than one place. Like, you definitely need something that you can use in more than one place. That's why I say don't ever do store credit cards. They're great. I get it. You were able to do such and such in so much time. But store credit cards, you can only use them in that store. That defeats the purpose of building your credit. So get a credit card, and I say this out of order, meaning that a lot of people have hate-love relationships with credit cards. But I'm going to talk about that later, about how credit cards can be your best friends. And if you've been to college, I tell people like this: credit cards are what one credit courses were in college. GPA boosters. So just the same that you used to take those one, like you used to take the class of music, and it was really boring, but you knew it was going to be a GPA booster that you needed to get to you where you wanted to go. That's the same with credit cards. They're basically credit boosters, okay? So we're going to get to that in a second, but that's something I want to let you guys know when it comes to trying to get that 15% discount, which is probably $2. You saved $2, and then you ran your credit score up, or dropped it in most cases because it's a new inquiry. Next is the types of credit used. So 10% of the types of credit. This is why it's important to have a mix of credit. So it's really great to have a credit card. Most of us have student loans, but paying on them makes a difference too. If you're not paying on them, that's really not helping you with your credit. But make sure that they are being least paid, or that they are showing that, you know, you have a good credit history with them. Also, a mortgage loan, a car note, all of those account the types of credit that you have. The more different types of credit uses that you have, the higher that your score is. So that's something to take into account when it comes to factors influencing your credit. Now, there are credit card companies out there, or any type of company, even your banks. A lot of them have where you can check your credit reports. A lot of them have where you can know your score. Like, for instance, I have a car note with Capital One, and they always send me like what's credit-wise tracker. I think that's what it's called. And I can track my credit report from them. There's a lot of freebies to track your score, to track what's reporting on your credit report. There's a lot of different factors out there. Utilize them. Do not be afraid of credit. Like, a lot of people are just scared to be like, oh my gosh, I don't want to know. But in order to get places in life, because credit is important. You know, it's the reason how you can do so many things. Like for me, I tell people I've built it up so much that if I need something, I know I can go to the bank and I'm getting approved. Like there's no questions asked. And you never know when you may really need something. So that's why it's always important to know what your credit score is. Okay, so ask questions, and you say, is credit wise good? In all honesty, I use Credit Karma just to monitor because they give me a new thing once a week. So I use that to monitor everything, and it also notifies me whenever something new is up. So I use Credit Karma and Credit Sesame and Quizzle. Those are the three I've always used, only because they were all with different credit reports. So at least was able to monitor every credit report, and it was free $99. That's how cheap I am. So that helped me tremendously. Okay, so now we're going to talk about how do you start rebuilding your credit? How do you get to where you need to go and be able to either buy a home or just have good credit, period. But for the sake of purpose that we have today, it's really about how to rebuild your credit in order to purchase a home. So I'm going to give you guys these little tidbits. My first tip: you do not have to pay anyone to rebuild your credit. I know there's tons of credit repair companies out there. I get it. It's all a part of the game. People got to make money too. People got to eat. I get it. But realness here, you do not need to pay anyone. You just need to know what to do. And a lot of people are like, well, I don't have time. I'm like, you take probably 30 minutes out your day to know what's really happening. That's free $99. You can pay somebody. Y'all know how expensive credit repair is? And you pay that monthly. And people are like, oh, they got things moved off my credit report. Listen. This is what you need to know. If it's been on your credit report in the negative section for 7 years, it had to go anyway. In the inquiries part, if it's been on your credit report for 2 years, it has to go anyway. So you're thinking like, oh, but they got such and such removed off my credit report. That's cool. It was probably about to fall off anyway. And you just spent $300 a month for something that probably was about to fall off anyway. You get what I'm saying? That's why I always tell people it's easy to do it on your own. You just have to know what to do. So that's my first tip. Second tip is make your payments on time. That's that simple. And I get it. There are times when you can't. And if you can't, guess what you do? You pick up the phone and you call your creditors and say, I ain't got it this month. What can y'all help me with? And I say that as simple as it is, but that's the God honest truth. You're just like, I ain't got it. And sometimes on your credit cards, you have what's called like a waiver for those different types of things. Things happen and you call and say, hey, that insurance that I have on a credit card, we may have to use it for this month because I ain't got it. And people do not think to do that. It's the simplest thing. It's just to open the mail. Because I'll give my story before I go any further, okay? I went to college from 2006 to 2010. And I signed up for every credit card there was. Half of them denied me, which is great. But I signed up for credit cards just to eat. Now, if you went to college around the same era or earlier, then you know you can get a free meal, a free t-shirt, and everything just by signing up for a credit card. And guess what? I was broke.com. So I signed up for them. Is it ignorant to do? Yes. But I didn't know any better at that time. So in college, I would run the credit cards up. And I actually paid for a baby shower with a friend that I'm no longer friends with on my credit card. We ain't talked since that damn baby shower. Now, granted, we didn't have any like blowouts or anything like that, but shit, if the baby picture was posted today, I wouldn't recognize that child. But I put my whole credit card on that baby shower. So it's just like ignorant stuff like that I was doing. Didn't know any better. And at that time, minimum wage was $5.15 at LSU. So how was I paying this credit card back? Just ignorant. Didn't know anything better about it. So I just let that go. And they would send letters in the mail. I went and answer some hell. I ain't even got $5 to put on it. So I don't know what you want. So I just went and answer the mail. And it wasn't until I went to grad school that I'm like, I may need to try to do something. And actually, that wasn't even my idea. It was basically the collection companies calling me day after day after day, talking about they want their money. And I'm like, I don't know what you keep calling me for. I ain't got no money to give you today. So you can call tomorrow too, and I still ain't gonna have the money. And so finally, one of them just really threatened me. And I was like, let me find these folks their money so they can stop calling me. They're gonna put me in jail or something. So that was the start of it. And I paid that one bill off, and I was so excited. I was so happy. And then I looked at my credit report and was like, oh, I got a lot more to do, but I didn't know how to start. I didn't know what to do. So fast forward to graduating from grad school, and knew I wanted to buy a house eventually. And the one thing that made me really want to fix my credit was that I met this guy, and he was like, he only date chicks with good credit. And I just slumped in the seat like, oh, that's good. You don't care about how their heart is. You don't care nothing about that. So it was the guy that kind of made me really get serious about rebuilding my credit. And so also I worked at a job in South Dallas where we basically taught people how to rebuild their credit. And so I took those tips and I was like, how can I give this information to people if I'm not taking my own advice? So I became a candidate for the information. And so if you're looking to rebuild your credit, the first thing that I tell people is know where you're spending your money first. In order for you to do anything, you have to know what you're spending your money on. So print out your bank statements. We usually get them in email. We don't read them. Print out your bank statements. Most of those have incorrect information on it too. And guess what? They probably pulled out some money you didn't know anything about. Pull out your bank statements and kind of highlight. Get your different highlighters. I used to like to have like a green one and a pink one and a yellow one, and I would highlight how much I eat out and be like, oh, girl, you doing too much. So I would highlight that, and then I would also go back and just highlight different things like, where's my bills? So those are things I know I have to spend money on. And then I just created a spending plan. Mind you, I did not say anything about a budget because I know budget makes people feel like they're very limited in life on what they can do. I created a spending plan on where I spend my money at. So I knew how much I had to realistically pay off my debt. I did this is talking a lot about my business, but I'm being honest with you guys and giving you great information here. My very first job out of grad school, I was making $28,000. Barely that. It may have been $27,000 is what I made. And I didn't have any money. I didn't have money to do anything but pay rent and go home. But I knew how I like to live my life. So I was like, I have to get really serious about this if I really want to build my credit up. So you can do it. And I know some things may be tight, but I live by this philosophy. It's always going to be things, in order to get where you need to go, you have to do things you never did before. So if you want this certain type of life that you want to have and make sure that you have an abundance of things, you have to change certain things that you're used to doing. And so that's basically how I came to this whole tidbit on what I need to do. So if you have, the first thing you should do is know where you're spending your money at. Make your payments on time. And if you can't, call the different lenders or the different credit card companies and say, hey, I can't make it. What can you guys do? They might skip a payment for you, especially if you've been paying on time. They could easily skip a payment for you, or they can say, okay, we'll waive this month. When can you think you can pay it? Can you pay $5 this month? Therefore, we'll just count it as being active until you can finally get back on your feet. Call and let them know. Also, negotiate the payment or remove late payments. Like, go through your credit report and ask them, can you negotiate payments on them? Can you have them remove any late payments? Some will, some won't. Just keep calling until you get the one that says yes. Every no, you're one step closer to yes, okay? And so dispute any incorrect information as well. So that's why it's important to know what's on your credit report, because information that's not correct has to go, and they have 30 days to correct that, you guys. So don't just sit there and be like, oh, I can't do it, because you can. You just send out information. I do not think this is correct because X, Y, and Z. They have 30 days to respond. If they don't respond or they can't prove that information, then it has to go. And with a lot of those collection companies, they don't have the original documents out there, y'all. So they can't prove anything. They can't prove that you signed up for that card and you probably maxed that out and bought your whole new TV with that card. You seeing the purchase of that card every day in your house. But they usually can't prove that. So I always tell people, if they can't prove that, it has to go. Now, if they prove it, that's a different story. But always make sure you pay attention to things and you know dates. And sometimes it just requires a phone call and say, hey, when was the last time I made a payment? Because a lot of people don't understand the date of last activity means the date of last payment. And anything that's negative in your information, remember I said it has to be removed 7 years after that date. So if you know the last payment you wrote on something, some debt, was back in 2010, it should be gone. And if it's before September 2010, it should be removed from your credit report. It shouldn't even be on there. So if you still have negative debt, remember there's positive debt and there's negative debt. It should be removed if it's been longer than 7 years. Now you want your positive debt to stay on your credit report forever, as long as it can, because that's helping build your credit score. So the next thing I would tell you also is to look at the positive debt that you have and figure out where you can pay it down. Remember I said with credit cards, and people sometimes be like, credit cards are really bad, you shouldn't use them. Credit cards can be a lifesaver. You have to know how to use it. Like, that's the main difference. How do you use your credit card? So that makes the major difference in between a lot of different things, is how are you using it. So basically, if you have a credit card, try not to use more than 30% of the balance. I mean, not even the balance, the limit. So if it's a $1,000 limit, try not to use no more than $300 on it. And if you happen to be the ones to max it out before it's due, go back and make it down to $300. That's basically it. So you don't even have to pay it all the way off, but make sure you pay it down. And that helps boost your credit score. Now, if you're one of those people who are really scared about using credit cards, like I'm not trying to get in credit card trouble, this is my one tip that I give people. Find that one bill that you pay on time, all the time, and put it on a plan for that bill. Use your credit card, then go back and pay it off. Therefore, you're constantly using a credit card. Now, when you use that specific credit card, pay it off and leave like $5 on it. Because you wanted to report to the credit bureaus that you're at least using that card. And once it's been reported to the credit bureaus, then go back off and pay that $5 off. So technically, you did pay the whole card off. And just keep doing that to build your credit. Okay, and also creating history and improving your history when it comes to rebuilding your credit. So, and this goes back to the credit cards, and I tell you, I don't create the rules, y'all, but basically credit cards are credit boosters. I didn't say you had to get 50 of them. I'm not saying that at all. If you're looking for a credit card, get one that has rewards. Now, I'm not a fan of Chase, but I'm a fan of the credit cards. They have one of the best credit cards out there to me. That's my opinion. I'm not saying that's right, but that's just my opinion on it. Now, it's best to use a credit card that gives you rewards. So if you're going to spend money, make sure it gives you something back in return. Those are the better credit cards, whether it's a gas reward or if it's, I'll tell you about the Chase credit card. Basically, using the Chase credit card, I got a whole flight voucher for $700. I can't beat that. I like to travel a lot, so I use that Chase credit card faithfully and I pay it off. So that's how you improve your credit when you're managing to boost your credit. Add new debt to offset any of that old debt that you have that's supporting bad information. That's the only way you pull it up. Even if you feel like I can't realistically pay for this old debt, you need some new positive debt to help you. One other thing that I would give you as a tip for those, I had a question earlier today, like what do you do to rebuild your credit if you don't want to do credit cards? If you're in the Dallas area, and I would tell anyone if you're not in the Dallas area, look for a local credit union that may do this. And there's 2 credit unions that do it here in Dallas, and it's something that I did. It's called a credit builder loan. Now, it's going to take a little bit longer because it's an installment payment. So it's going to take a little bit longer, but it gives you another type of credit. And so what it's going to do is it's going to report to the credit bureaus that you have a loan from a bank, which is a great thing when it comes to the credit report. So it's going to show that you have a loan from the bank. And basically what it's going to do is, this is how it works. They don't hand you the money. And I did a small one. So I did $500. And what they do is they make it a hold in your account. So for that $500 I did, they put a $500 holding. And so I had to pay into that for 6 months. And it wasn't a lot. I think it was like $85. Had to pay into that every month. Why? Because it's now reporting to my credit report. And it's nothing but a savings plan. So it's forcing you to save money. Because once you reach that $500 amount, they release that $500 and it sticks in your account. The name of the credit union that does that one is called Resource One Credit Union. It is local here in Dallas. So if you're looking for one, I think they have Houston branches as well. It's called Resource One Credit Union. And the second one that does it locally in the Dallas area is called Neighborhood Credit Union. Those are the 2 I definitely know that does it here in DFW. So you can definitely use one of those, and it's just a credit builder loan. Yes, I can see you the information for it. So you have Resource One and Neighborhood, and I use Resource One. So if you guys need that information, feel free to send me a DM and I will send you that information and contact, and I'll also make sure to send you different locations that you can choose on that one. But that's a credit builder loan. You don't have to do the credit cards, and it just helps you save money from there. So next topic, how do you manage your credit cards, or how do you manage debt? You think that's manage debt? How do you manage debt? I like to use a method. It's called like a debt snowball method. And I like to use that one. And that's not mine either. I got that from Dave Ramsey, reading one of his books. I liked everything he said in the book, but some things I thought was just very unrealistic. Yeah, he was like, sometimes you, and it goes back to sometimes you got to do things you never did before. But listen, I am not staying somewhere that I don't feel safe at just so I can save $1,000. I just can't do it. I'm sorry. I think the best thing he said in the book was a debt snowball method, and I ran with it, and that's what I live by. So to manage your debt, usually what the debt snowball method is, you basically get your debt that you have in your credit report, and you highlight the smallest debt on there. So if you have debt that's like $100 here that you need to pay off, or it could be $1,000, the next debt is like $2,000, next is $3,000. Start with that $1,000 debt and find a way to pay it off. Meaning you add more to the minimum payment. A lot of people do like to pay the minimum payment, and that's perfectly fine. But if you're trying to knock out some debt, one of those payments, you can add more to the payment. And so the minimum payment that you have on any debt is just the interest. I mean, you're just paying interest. You're not even knocking out the principal. So for your credit card, if it's like $35 minimum and it's a debt you want to knock out, start adding like $5 or $15 to that debt if that's all you have. Wait, I have a question. Is it good to do both? Does it speed up the building process? You can just do one. I don't think it speeds up the building process because it's like at least 6 months. So it takes time. It's just showing up as an installment loan. It shows up as a different type of use of credit. So that's why I said the credit cards are the boosters, but you have to know how to use them. And if you're just scared to use them, I say use that one bill you know you pay on time all the time. So if you have a cell phone bill that you know you pay on time all the time, add that to your credit. Add that to your credit card and let your credit card pay for that, and then you go back and pay it off. So that just makes more sense, and you can build your credit from there. And you also add the credit builder loan as another mixed use of credit, because remember when I said the types of credit goes with 10% of your credit score. So that gives you different mixes of credit there. What was I lost my train of thought, y'all. Oh, managing the debt. So that's kind of how I manage it from there, is to go through and say, okay, I have this debt I know I want to pay off. How much extra do I need to be able to pay this off? So I kind of add more to that one. Something else I haven't mentioned, but I want to while I have people here listening. The first person you should pay every month when you get your paycheck is yourself. A lot of people do not do that. And I tell people, no matter what happens in your life, and no matter, you know, who you owe money to, it's always about what you have left on it. You have to pay yourself first. So if I would always take at least 10% of the check and put it into my savings, because you never know when you may have a rainy day. And if you save for a rainy day, you don't ever have to have a rainy day. My credit score is 423. Can you help me? That's a good question. So when your credit score is 423, that just means we need a lot of stuff to go on from there. So that's not to say you can't get anywhere. That just means time. You're going to have patience and time. And it's basically just going through and figuring out exactly what's happening, what happened, and how do you overcome what happened. And with someone that has a score of, let's say, below a 500, it's basically just going through their report again and just saying, okay, where did something happen? Because your credit report just basically is a financial picture of yourself and what happened. And it usually tells a story. So I always tell people, if you look through my credit report, well, not now because everything's kind of pretty much gone and I fixed a lot of different things. But if you were to look at it a few years ago, you would see a trend of a lot of things happened in 2008. The debts went bad in 2008. So it will be a question that I used to have with people who would come into my credit counseling class, and they'll say, and I wouldn't ask, I could just look through their credit report and I'm just like, okay. Oh God. And I would just say, okay, based on the credit report, something happened during this time frame. Like all your debts went bad here. And it's something you can simply do and just say, go on your credit reports and say, hey, X, Y, and Z happened during this time of the year. So if you look through my credit report, you will see that most of my damage happened, or most of the things happened during this time of the year. Now, I'm not going to tell y'all why my credit went bad in 2008, but if you know me personally, you probably already know. But that's kind of when everything went stall, and I didn't have money for it because I put my money in these other places. So there. But that's something that you can definitely do. So if your credit score is 423, do not be discouraged on how do I rebuild my credit? I can never get it to where it needs to be to qualify for a mortgage. I have to do this. I have to do that. It just means changing up your habits. And it goes back to knowing what your spending plan is. Look at where you're spending your money at. Because if you're making really great money, and when I say really great, it's going to be based on what you think is really great. But let's just say on average, you have a 423 and you're making $50,000. It may be to go back and look where you're spending your money on. You go back and say, okay, well, I don't even watch TV, but I'm spending $200 on cable and internet. Cut that out. That's $200 you get to save every month. And it could be wherever you're staying and you're like, oh, I really like granite countertops in this type of nation. I like this and that. And I'm paying $1,500 of rent in a month. Go somewhere where you can get that same thing cheaper. It may just be out of the norms of where you're staying at, but that's just something a little bit different. So it could be, let's say for the Metroplex, it could be you can get the nice apartment in Louisville for $1,500, but if you go around the corner, maybe to Carrollton, you can get that same apartment for $1,000. So that's $500 you get to save. So it goes back to realize your spending habits and know how you can realistically tackle your credit report. Also, if you're looking to build your credit as well, some other tips that I would give you is, if you have someone who has really great credit, ask them if you can be an authorized person on their credit card. But only get someone, and I always tell people, only use, like, if your parents have really great credit, ask them if they can add you to their credit cards. They may not. And I would, if it was me and I know they have really great credit and they pay things on time, I would just say, I don't even need the card, just add me to it. And I'll send you back the card so I don't use it. Question, should you pay your highest to smallest in year debt? I like to do the smallest debt first, because then it really makes you feel like you're accomplishing something. So let's say your smallest debt is $300 and your biggest debt is $15,000, and you just feel like you're trying to tackle that $15,000 debt first. Then it's going to be one of those things where you're just like, I'm never going to make it because I'm trying to pay this $15,000 debt. But you can realistically make it on a $300 debt first. So I would tackle that $300 debt so you can feel like you won something. And that goes back to that debt snowball method. Okay, next question. Do you have a credit repair program, and how much is it? I do not. So this is basically me giving out free tips to help people be able to do it on their own. And it kind of goes back to the beginning where I tell people the first step is to know what's reporting on your credit report. It's really not that difficult. It just requires time and patience. And I say time and patience because things didn't happen overnight when it comes to credit, so you're not going to be able to fix it overnight. And I believe in the method, if you teach a man how to fish, he'll eat for days. So if you teach someone how to work on their credit and be able to build it up, then they'll be able to know what to do in case things happen again. But if you do need help, send me a message and I will get you with some of my people, some of my lenders who can really do some things and really help you know where you need to go. So send me a DM, or if you're on Facebook, send me a PM and I'll get you help if you need that though. Okay. So the credit hacks that I'm going to talk about is, you can get the authorized signer, or you can authorize yourself on someone's credit card. Maybe look into your parents if they have really great credit. Make sure they pay stuff on time. Don't just be adding yourself to somebody's credit card and they don't pay stuff on time, because that's hitting your credit score too. Also, you can ask for a credit line increase. Now, credit line increase goes back to, you're welcome. Credit line goes back to your debt to income ratios. We didn't even talk about that. So if you're looking to buy a house within a year and you know you need to focus on credit, one of the biggest obstacles that get into people's way is the debt to income ratio. Meaning you have a 620 or you have a 680. You're good. But what you don't realize is how much debt you realistically have. Now, depending on the type of loan that you're going to get qualified for, really goes back to how much you can get approved for. And it goes to that debt to income ratio. A lot of people come to me, and I've had it over the years, so I'm not even picking on any one person. It's just the stories that I have. I've had even couples are like, oh, together our income is $100,000. So we know we can qualify for a $300,000 house. It doesn't necessarily work that way, because you qualify for a house based on your credit score, based on your income, but also how much debt you have. And that plays a major part in it. So when I say debt to income ratio, I just means how much debt you have compared to your income will determine how much of a payment you can realistically have. Now, if you're worried and want to know what your debt to income ratio is, send me a message. I'm telling you guys this right now. Send me a private message now, and I will make sure to connect you with some of my people who can help you figure out what's your debt to income ratio and how you realistically can be in a home within a year. So another thing is just with that debt to income ratio, it really depends on what loan program. Like for instance, the FHA loan that I talked about earlier, you can have a little bit more debt on FHA compared to a conventional loan. So a conventional loan stops at 50% of debt, and an FHA loan goes up to some lenders for 57%. But it really depends on the lender that you have. Everybody has different scenarios. Everybody uses different things. So I'm going to break it down what I mean by debt to income ratio. So for instance, and I'm going to do this a little easy just for easy math. Let's say you made $36,000 a year. That's approximately $3,000 a month. So they're going to base debt to income ratio based on what your monthly income is. And this is before taxes. Okay. So for someone who makes $36,000, their income is $3,000 a month pre-taxes. And based on that, give me calculations, D. And based on that, let's say if you made $3,000 a month and you were going to go for an FHA loan, which only requires you to do 3.5% down, what is 57% of $3,000? I'm sorry, this is D helping me in the background, y'all, so I'm not talking to myself.
1710.
1710. So that means that's the whole debt you could have, including the housing payment. It can't exceed 1710. So let's say if you were looking at a house and your debt to income ratio was at 1800, the lender can basically tell you, okay, if you pay X, Y, and Z off, or if you pay this down, we can get you into a house at this price because it flows to the debt to income ratio. We know we won't have any issues. So at 1710, let's say you have a house and the house note payment will be $1,500. That means you can't have any more debt to equal out $210 a month. And when I say a month, a lot of people think it's all the minimum, all the max amount. So people are like, oh, I have student loans. It's not based on the max amount. It's based on what you pay a month. So if you have credit cards and stuff that are total over that amount, you may need to look to pay those down. Not necessarily off, but down. So especially if you can't pay them off, you can be able to pay them down. And also something that I tell people too to look at to build your credit is to also know about credit line increases. So you can always call your credit, especially if you paid in time, and say, hey, you know, I'm seeing that I'm at the max. So I know I have $1,000 limit. I'm at $955 or $999. Is it possible to have a credit line increase? Because what that credit line increases does is showing that you're not using a lot of the debt. So if they can increase it to $1,500, that makes a major difference on how much of the debt that you're using on that card. So that's something else to think about when it comes to credit hacks as well. You can also change your due dates. You can change the statement date. So all of those are different things you can ask for in order to rebuild your credit. And also something that people do not think to do is negotiate lower rates. You can negotiate almost anything in life. So don't ever think, oh, they won't do that. You don't know until you ask. The worst answer they can give you is a no. So even with your cable bill, negotiate. Call and say, okay, X, Y, and Z said they was going to give me this payment for here. Can y'all match that? You can do that with anybody. Even your car insurance. Like, I do it with Geico, like, on a quarterly basis. Like, listen, y'all act like I don't know this payment's went up $15 in the past 3 years. And I know it's $15, but that's how cheap I am. And I'm like, listen, State Farm talk about a whole different story, but I want to stay with Geico, so what can y'all do? You can do all those things to help you save money and help you be able to rebuild your credit. Because sometimes when it comes to rebuilding your credit, it's really going to take you paying off some of that old debt. And one of my main tips that I tell people is, if the debt is older than 2 years, let's not focus on that first. Let's focus on things that happened 24 months prior. So if you're looking to really rebuild debt, go on and pay off, or not even pay off, go ahead and focus on those debts that happened from September 2015 to September 2017. Those are the things you start off with first. Do not try to go back and try to fix on credit that happened 5 years from now. It is not affecting your score as much as things that are happening within the previous 24 months. So if you know you've been paying everything great in 24 months, your credit score still isn't moving, then it means you made it to add different mixes of credit to that. And you're able to boost that up for yourself. So that's all my tips that I have. And I will tell you guys, if you have a question, you want to ask it privately, or you would like for me to connect you to one of the lenders so they can tell you what your credit is and you can realistically figure out, will I be ready within a year's time, or would I realistically be ready within 6 months? Contact me, send me a message, and I can definitely connect you with some of my lenders. I don't know if you guys, on my Facebook page, you see Shelton's comment. Hit him up. He's one of my lenders. He does an awesome job. Now, That 423, he may say you need to work a little bit more, but hit Shelton up if you want to know where you can be in order to purchase a home within the next 12 months. And Shelton, I know you should be able to help, right? Okay, so if you guys have questions, answer them now. I am here to answer any question that you have. And I know I feel like it probably was overwhelming. I tried to make it short and quick so you guys could at least follow along and understand different things. But I'm gonna go back and do like a quick recap. And if you have any questions, feel free to hit them out, and I will be, see Shelton on Facebook. If you're following, watching this on Facebook, Shelton said he got y'all, so send him a message right now and ask him, hey Shelton, how can you help me out? Can you run my credit? Let me know what I need to do. I'm trying to buy a house by X time. Can I realistically buy it at that time? Hit Shelton up. And over here on Instagram, if you guys have a question, send me a PM. I can hook you up with my lenders too. I can even hook you up with Shelton's information, okay? But I'm just gonna go back and give a recap. Remember I said to know what you need to do and what's reporting your credit report? Annualcreditreport.com. Hope you guys can see this. Annualcreditreport.com is where you can start at. When it comes to your debt information and how it determines your credit score, 35% is your payment history. 30% is amounts owed. 15% of your credit score is the length of credit history. The older the credit, the better it is. So make sure you pay much attention and pay on debts that you've had for a really long time. Next one is new credit / inquiries. Do not round up and get a lot of inquiries. Be very selective on who runs your credit too. So don't be in Victoria's Secret trying to save 15%. I didn't mean to put them out like that, but y'all know they do it. Don't be in Victoria's Secret trying to save money off 15%. Because 15% off $100 is what? Like $1.50? $10.50? Yeah, like $10.50. About $10.50 to $15. Better be looking at some coupons. And the last one is types of credit. So a mix of credit would be really helpful. That's count as 10% of, thank you Shelton, I figured it out after a while. Has the types of credit that you need, so that counts for 10% of your credit score. So those are the things that I will definitely tell you guys to look into when you're trying to rebuild your credit, is knowing what's reporting on your credit report and where to start. The first thing to start on is look at your positive debt. Realize how much you need to pay down. If you have credit cards, try to pay them down to 30%. And I always tell people, if you're starting out, start at 80. Try to get it down to 80% of the limit. Then try to move it down to 50% of the limit, and then you knock your way down to 30%. Keep it below 30%, but keep your scores up high, okay? Now, there may be times where you're like, oh, I did a little too much on the credit card. Try to make sure you go back and pay a little bit more than the minimum. And that's even if it's $5. If you have $5 extra to pay on it, because that $5 goes towards the principal. Something else. Give me another tip. Just trying to remember the tips that I have. Ask for a credit line increase. That's something else that you can do. Ask if you can change the due dates. If you realize, I noticed for me, a lot of my payments come in the middle of the month and it becomes very overwhelming. So I try to move some of them towards the end, or try to move them in different places of the month. Try to do that with some of your debts as well. And negotiate lower rates. Can I buy a car while I'm buying a house? The answer is no, y'all. Like, if you're trying to buy a house and you're doing credit, and your credit depends on your house, do not go buy a new car while you're trying to buy a house. I'll give you this one story. I had a client, we were doing a final walkthrough for her house. She had built the new house. We were doing a final walkthrough, and I drove up and I noticed there was a car I had not recognized, but I knew it was her because she parked on that side every time we met up for something. I was like, please tell me that is a rental, because if that is not a rental, we are not closing tomorrow and you can kiss this house goodbye. We gotta go. And thank God it was a rental, because she's like, no, I'm holding off until after I buy a house. Do not, when you're trying to buy a house, do not go and buy that refrigerator. Buy that refrigerator after you buy the house. Do not add any new debt to yourself until you have a figure of if you're going to be good. So I always tell people, ask the lender before you do anything when it comes to your debt when you're trying to purchase a home. So you don't have to get the new credit card. Don't even try to max your credit cards out once you've been approved for a loan too. You'll be surprised when people do that. And also, something that affects your income when you're trying to buy a house, don't quit your job. Do not quit your job. Like, I'll be honest with you, the lender does not care if you quit your job the day after you buy the house. That's something you to worry about after the fact. But don't quit your job while you're in the middle of the process trying to buy a house, because they will call and verify if you're still working there. Because nobody's giving you 6 figures on bad credit, and nobody's giving you 6 figures without a job. So those tips. I know that last part wasn't part of credit, but I just wanted to throw that out there when you mentioned about the car. Okay, Any questions? I'm here. Let's go. Nah. Oh, Shelton added, and continue working your overtime. So if you qualifying for a home loan and you work overtime, you have to continue working in overtime. Don't be like, oh, well, I'm going to stop working overtime. I've gotten approved for a loan, because that overtime probably was helping you get approved for the loan. Thank you, Shelton. Any other questions? And I'm doing this live on Facebook and Instagram, so if y'all keep wondering what I'm looking at, it's probably because I'm trying to do both of them at the same time and make sure I give you guys eye contact. So I'm responding to people on Facebook, and I'm also responding to people on Instagram. So I always tell people, choose the social media that you want to do, and I will definitely report to you. One question that I have on Instagram: how many credit cards should you have? I think that's a personal question, most likely, because it really just depends on you. I don't want to say one is too much and one is not enough. It's really basically how you can manage the debt on them. So I would say for myself, I have a different mix of credit. So I will say that I have a personal line of credit that's just there in case I just need to grab onto something, and the rates is really low. So it's really helpful for that purpose. But I usually just really got it because I wanted to do some type of developments, and it was like more of a business decision more than anything. So I do have lines of credit. I think when it comes to credit cards, I may have like 3, maybe 4 for my personal self, and that's just me. I think that's as most I can manage. But there's some people out there who really live off credit cards, and there's some people who don't understand that. And if you know how to manage the credit cards, some people normally do. Some people pay everything their credit card because they know they can go and pay it off, and because they have a credit card that gives them rewards. Like the Chase credit card that I have, it gives me rewards whenever I book flights, whenever I book hotels, and people are like, how do you travel so much? You swipe it, you get rewards, and then those rewards get you to other places. So I'm a real fan of credit cards that have rewards, and there's not a certain amount that you should have. Now, there is one credit card that I use more than others, and the others are just there. There's some that I don't even carry with me because I just don't like to use them for the rewards. They were probably like credit building credit cards that I have, and I just go from there. But I've had them so long that I can't cut it out. So it's really up to you. If you don't have one, I would say get one. Get one that has rewards, so when you use it, you do get something back. And just start from there. You don't have to really build it up. If you have one that you can use realistically, go from there. If you cannot get approved for a credit card, they do have secure credit cards. And secure credit card is basically where you put money on the card. I know it sounds like a prepaid, but it kind of works in the same way. You get a secure credit card, and that's usually helpful for people who cannot qualify to get a credit card. So the secure credit card is basically you putting money on there, so you've already given them the collateral from that. And then go from there. Okay. Okay. Any other questions out there? Okay, so if you have no questions or you just don't want to ask them right now, send me a DM. And I tell people this all the time. I'm going to talk more about my story about credit. And so be on the lookout at the end of the year. I'm trying to have that out. I have a book that's going to come out. It's called Credit and Me: The Adventures of Growing the F Up. Okay, so I talk about all my stories that I have on just basically where I went with my credit journey and how I was able to do that. And I only was making $28,000. The good thing about that was I didn't have a car note at that time, so I was able to really manage it, but it was a struggle. And I like to eat out. So the fact that I like to eat out, I had to pull out cash just for my eating out habits. And once that cash was gone, I had to sit at home and cook. So if you have habits like that, I always tell people, budget your habits. You can still have them. Just know that's where the money's coming from. And once you run out, you got to kill that habit that month. So that's kind of what I did. So be on the lookout for that. The Credit and Me: The Adventures of Growing the F Up by Andrea. And that's going to come out at the end of the year. So I'll talk a little bit more, and you have like a guideline to really how you go from everything from there. But if you have any questions, want to connect with some of my lenders, if you're looking about within a year and just need to know where your credit's going to be at, go ahead and send me a DM or a PM on Facebook, and we can go from there, and I can get you connected with some people to tell you where to go. Also, I have the workshop this weekend. So if you're looking to do new construction, which is perfect for people who are rebuilding their credit and need just maybe 6 more months or maybe 7 to 8 more months, new construction is a really great way you guys can go Thank you. Thank you, Shauna. New construction is a great way to go because you can work on that as you're rebuilding your credit and you already have the house planned out. That makes you a little bit more serious in things and getting things done. It's a hard appeal for people. Some people can't realistically do it, but if you need something to push you forward and make sure that you're serious about it, that's one way to do it and one way to go. That's just my little side tidbit on that one. Do know, you can always come to the workshop on Saturday. We will be giving our free credit reports. So if you're looking for that route and you want to meet face to face, that's a good way to meet me too. It's going to be Saturday in Aubrey. And if you're on any of my pages, you should see the event information. So it's going to be Saturday at History Makers Model Home in Aubrey at 10 a.m. I'm not going to keep you guys past 12, so don't feel bad about that. Just come hang out with me for a few hours and get your free credit report and win some amazing giveaways too. Any other questions before I shut it down? All right. Thank you guys for joining for the Tuesday tip. And if you can join me next Tuesday, make sure that you tag your friends into this and just let them know about these. I'm going to be doing another one next Tuesday, and I'm going to talk about what's happening in the DFW real estate market so you can know how to prepare either to sell your home or to purchase a home, and knowing what you need to do and how to prepare yourself for it. Tune in next Tuesday. Make sure you tag a friend, let them know about it, and make sure you send me other friends who I can help assist when it comes to credit or when it just comes to home buying, purchasing. Send me DMs and tag friends too. All right, you guys have a great day, okay? Bye-bye.